Hi everyone, welcome to my YouTube channel. My name is Tabitha, and today we are going to talk about swing trade. If you're new to this channel, welcome and subscribe for more videos. So today we are going to talk about swing trade. So agendas of today will be what is swing trade and what are the requirements that you need for you to do swing trade. Let's start with defining what is swing trade. So swing trade is when you only take one leg of the trending chart or stocks and then you trade it. So it can take more than 1 day, which is up to 2 weeks. 2 weeks. So let's say, for example, you have decided to do swing trade and you are here. So maybe you say, I will do shorts. So short is I will go short. So short is when you borrow someone's shares or stocks and then sell them when the price is high. And with the knowledge that this price will go down later on in the next few days. So if you sell those shares, you borrow them, you sell them, you maybe sell them at $100. So when the price goes down now and you buy them back at $80. So now you can take back the shares, but the difference between the price that you sold them and the one that you bought them back is now your profit. Let's say, for example, you sold them at 100 and then you buy them back at $80. So the difference will be $20, which is your profit. So now you no longer have the stocks. You give them back to the one who lend them back to you, and you have your $20. That is going short. What about going long? And you go long is when the price is lower than its previous target. So if it's lower and then you buy the share stocks and then later on you sell them when the price goes up. So this is after you have done all your analysis and you are very sure that the price is going to rise to its previous high. So if you know it's going to go back to that, and then you can buy stocks at the lower price and then sell them later on at higher price. And then the difference between the two prices will be your profit. So let's say you got them at $80 and then now you're selling them at $100. So you get $20 and you're only trading this one short, this one leg. This one leg is what they call swing, because this diagram is like it's making a swing. So you only grab one swing, and that swing can take you like more than 1 day, which is up to 2 weeks. So you can either go short or go long, depending on the strategy that you see. What is swing trade? That is the one that when you buy stocks and you hold them for more than a day and for up to 2 weeks. So it depends with individual. So benefit of doing swing trade is less active and you don't have to sit in front of your computer and look at your stocks the whole day. So if you have do your due diligence and you have already do the analysis and you know which stocks that you're best investing in or you're trading, you can set your trade and then you go do your other things. So it's less active. What you require to swing trades are very important for you if you don't want to be a loser. So you need capital, and most of the time the capital that you need is not that much, and it's like the easiest business that you can start. You can start at $100 or $50, but what really matters here is what the knowledge that you have for you to trade and be a profitable trader. So capitals is require, brokers require tools, stocks to swing trade, and also reading charts and trend skills, and risk management and strategy and processes. So all those things, you need them for you to be a profitable trader. You cannot just go and say, oh, I heard that the Tesla was trading at this point and everyone is becoming a millionaire. Let me just go and do it, when you don't know what you're doing. So then you will go and be the loser and you lose all your money. Yes. So you have to have tools for you to trade the market. Capitals. So as I have said before, it's not much that you need to be involved in the financial market. As long as you have the right knowledge, you can really succeed here. So and then you can keep in mind too when you're talking about capital. So how much are you willing to pay for commission? And most of the banks, brokers, they charge $10 as a commission. What about brokers? So what are the brokers that are your favorite ones? The banks have their own brokers like CIBC, Bank of Montreal, and Scotiabanks. And this one, they think like they come with expertise. So most of the time they charge you $10. But there are other options like Questrade that are online brokers, and they only charge you $5 for you to place only transaction. And for other things like ETFs and other things, you don't need to pay anything in commission. So you buy them for free. And even like individual stocks, when you reinvest if you reinvest your profit or your dividend, and then you do it for free when you sign up for something they call Drift. So if you would like to use Questrade as your broker, and then you can click the link in the description box below. People like need tools for you to do anything. If you're a farmer, you need to have tools for you to go on farms. You need stuff for you to go and do that. The same thing too for financial market. So you don't need to go there while you don't have any tools for you to do that trading. So let's say, for example, you need information on the stocks that you need to trade. So where you can go is Pinvis. You also go to stockchart.com and also TC2000. So this is the website, the site that will give you more information on that stocks. You can type in which stock you want to trade and you get all the information, starting from financial statements and the market news and all those stuff. So you can get them from there. So as someone who wants to be successful trader, as a swing trader, you need those things for you to succeed in your trading. Stock to swing trade. So before you do any swing trading, you need to know what are some of the companies you want to put your money in and for how long. So most swing traders, they do short-term trading. So which mean they can either go short or long on stocks, but for maximum of 2 weeks. So you can look at companies like Shopee, Neo, and maybe other other companies that have a trending stock, so the one that is moving. So not like, because then when you're doing swing trade, you don't need to go and hold stocks for long, because if you're using margins, you will be losing money on commission. So be aware of the companies that you're investing in. Are they stable? How long they have been in business? What are some of the product and services that they offer, and all those stuff, because you don't need to go throw your money in some sketchy company and overnight it's just crash on you and tomorrow you have no money and you take a bad news to the public saying, oh, financial market is gambling. So you need to know like what you're doing, and then thereafter you will succeed in your trading. Reading charts and trend skill is also required when you are doing swing trading. Historical stocks, price, long-term charts movement, short-term chart movement, prices, demand and supply. Those are the things that you need to know when you're doing swing trade. So like for me, I really understand what is demand and supply. So for how it's applied in this financial thing is that when you are doing a financial analysis, when you're doing the analysis and you're about to buy stocks, so there are some of the tools that shows you how many people are in line who are willing to buy those stocks and how many people are in lines who are willing to sell that stock. So there is a demand and supply in this case. So but for you to use that information, you can now see which one is higher than which one. If you look at the supply and the supply is less than the demand, and then there's probability that the stock price of that company is going to go up. If the demand is lower than the supply, which is people willing to sell. If the demand is lower than the supply, yes, and then the price of that company is most likely to go down. So that's how I can use that to determine whether the price is going to go up or down. And after that, you can now see if you're going to go long or short. If you see the price is going to go down, maybe it's the best idea for you to go short. Maybe borrow someone's stocks, sell them when the price is up, and you know in the next 2 weeks the price is going to go down. So and then you will sell, buy them back, give it back, get your profit. But if you see that the price is going to go up, and then you can go long, which means buy it when it's lower, and then in 2 weeks time it goes up, and you sell it, you get your profit. So those are some how you can use those information to help you to decide which stocks are you going to to invest, to trade, and when and where. Risk management. So risk management is like how scaling your position, like how much capital do you have, how many positions do you want to trade, and how much are you willing to risk, and how much are you, what is your targets in the profit taking and all those stuff. Volatility of the company is also important, because if you are dealing with a company that goes extremely low and extremely high, it's just like plump and and up all the time, like that one, you need to be critically looking at that and see if you really want to risk, and how can you tolerate that risk. So you see, like stop losses, like some people they said like when they are, how much money they are willing to lose, and how much money they are, and what is their target profit. So when they do, a lot, some people they say like R for two. So a dollar that you lose, you are targeting $2. So if it goes the opposite side, and then you are gaining 2R, and then when it goes to the lower side, and maybe you're losing $1. So just depend on the volume of your capital. And this is the end of the video. I hope you have gained something from this video, and thank you for watching. And if you have not subscribed for this video, please subscribe for more videos, and see you next time. Thank you.